Welcome back. Here with Money, Money, Money. This is the budget special and we are focusing on the key takeaways for the housing sector. Anshuman, this one's for you because beyond, of course, all the taxation elements, there were a lot of announcements that came in for the sector per se, for the industry. I'll just read out some of them just for good measure. First of all, this infrastructure status that's been granted to affordable housing. The affordable housing classification has been changed from carpet area to built-up area. There's a small change in definition there. Also, 100% tax exemption eligibility criteria extended to project completion over 5 years instead of 3 years, which was earlier, so offering little more relief to developers. And then, of course, a further ease of norms with respect to JDAs or joint developer agreements. A lot of complexity, but for the personal finance viewers, all they want to know, Anshuman, is that will this mean more inventory in the market? Will this mean more stability in pricing?
I expect, no doubt, the inventory to increase because this is, there are a lot of SOPs given in this budget. Infrastructure status itself means that, they can borrow, leave alone the cost of funding, but now the banks will be able to lend to low-cost housing projects more easily. The duration of time what the developers need to pay back will increase. They can also go after ECBs at better terms. So certainly it will encourage low-cost to mid-level housing, and I do expect the inventory to increase, so which means for a consumer there will be more choice and it will keep prices under check. And of course, from the consumer side, they are getting loans at a a lower rate. So I do expect post this budget the inventory or construction of and so-called low-cost and middle-income group housing to start gaining momentum, which is good. And the supply, like you mentioned, will keep prices under check.
So, I mean, to follow up on that and the earlier point that you were making, the idea of looking at affordable housing, maybe not from a self-occupancy point of view, but an investment point of view. Right now, there are no barriers to this, at least none that I am aware of. So, is this something that's advisable?
That's a difficult question because it depends on, the ticket sizes are also lower. And if someone is, looking to diversify and say, look, he, wants to invest smaller amounts of money, certainly it is advisable depending on what the location is. So some of this would, of course, come in the peripheral cities of the main cities. And if there is, for example, infrastructure developing in that area, the key is all this inventory may come, but even the government is constructing low-cost housing. Infrastructure is the key. That is, if there's connectivity, highways, is there social infrastructure like schools, hospitals, offices, etc. So if there is infrastructure coming in that area, or is already there to some extent, it does make sense to invest because, in the long term, there could be some appreciation and and also as the price levels are lower, hopefully there's an upside in the long term. But infrastructure would be the key for me.
Okay, and since we have you here with us, we can't not ask you this question. 2017, so look into that crystal ball. What do you think is in store for the real estate market, purely from a pricing standpoint? Are you expecting any markets to start strengthening? And for those who still don't have a home in Mumbai, will prices go down in Mumbai further anytime soon?
I do, again, I always say this, in India it's next to impossible to predict anything in real estate because logic does not apply. Because if you look at all the parameters, logically, the market shouldn't have been where it is today in price rise. But I do see in 2017 prices remaining flat mostly. Of course, there are different locations, how the supply and demand situation occurs. There could be an increase in price or it could be a bit lower. But generally speaking, overall, the prices will remain flat in Mumbai. In many areas, the prices cannot fall because already they've fallen quite a bit. And there is an acquisition cost of land for most of the developers and they put money into construction. Really, there's not much room left to reduce prices in some of the areas. But the good part is what I expect is there would be improvement in transactions as the economy picks up, but that will not have a major impact on prices.
Okay, all right. That's a lot about housing and real estate. But Parizad, before we wind up the conversation, you're the tax expert. Now, beyond housing, how did you rate this budget for personal finance? A lot of people were disappointed, including myself. Nothing additional for ATC, no further exemptions for NPS, no return of standard deduction. So there were a lot of no headlines, so to speak.
The theme is always to, put more money in the hands of the lower middle class. And that has happened in the form of, actually halving the tax rate from 10 to 5%. At all levels, except barring a few, there is an annual tax savings of roughly 12,000 plus per annum to 14,000 plus, depending on the way you look at it. Plus, again, the second objective is always, avoiding tax evasion and having stringent penalties for, weeding out cash transactions. There is an embargo on cash donations in this budget beyond particular amounts. There is a prohibition on, disallowances for any cash transactions. Digitization is, of course, being promoted come what may. At the same time, there are certain good procedural measures as well in terms of, reducing the time for completing assessments and audits of returns. They're going to come out with a very simple equivalent of the Saral form, which is a one-pager tax return form for lower income taxpayers. So that should be good. They have reduced the time to file the revised return. So in that sense, there is very little time available for individuals to, if they make a mistake in the original return, and there are certain time limits prescribed there. Overall, I would say, so
how much has the
so it's now from the end of the relevant assessment year, that's the upper limit by which you can file your revised return. Okay. And they also believe in prescribing penalties if you don't adhere to the law. So, gone are the days where as an individual you think, you'll kind of file your returns at your own pace if you have taxable income. There are cash penalties prescribed as a disincentive, of course, with the objective of increasing the tax compliance from 1,000 rupees to 10,000 rupees, depending on the income bracket that you fall if you don't file your returns on time. So overall, keeping in mind the objectives which have always been clearly articulated as to, no cash transactions, everything should be digital, more money in the hands of the individual the lower income taxpayers. All in all, the measures have been in that direction. Of course, one can keep aspiring for more, like you said, no standard deductions I was personally expecting, or our ever famous Section 80C, which is a crowded, all those have not happened, and that's where the angst comes in,
Oh, well, best not to mess with the tax man. That's always a thing to keep in mind. Thanks so much, Parizad, as well as Anshuman for joining us on the show today. That's it on this week's episode of Money, Money, Money. We'll see you again next week.